Hey everybody, welcome back to the show. So, anything interesting going on lately? Uh, if you can, as always, just give me a thumbs up that you can hear and see me. I thought I would do this live show because obviously there's a lot going on in the market. That's, I guess, an understatement. And it looks like today will be just as interesting, or maybe not quite, but we'll see. We'll look at the stock futures in a second. But I thought, well, we'll go live for an hour. We'll see what the market does when it opens. What I want to do, and still looking for a thumbs. Oh, there we go. Thanks, Mike. All right, good. What I thought I'd do is talk a bit about what's going on. I found some interesting resources. I've linked to them now all below the video that I want to share with you, give you sort of my perspective, hear what your perspective is, tell you what I'm doing or more likely not doing with my portfolio, and just commiserate, I guess. We'll see how this goes. I will say that one of the challenges that I have, maybe you guys don't, but I have on an issue like this, is it's very much tied to, obviously, to politics. Not all issues are when it comes to investing. This one clearly is. And so how do you might have a very strong view of our president, one way or the other. You may have a very strong view of, trade and tariffs, one way or the other. And that's fine. But how do we sort of step out of that to try to, as objectively as we possibly can, evaluate this and what, if anything, we should do? That's at least what I try to do. Whether I succeed, I guess, maybe you'll tell me after this hour. First, let's take a look at the pre-market just to see how bad things are. Of course, it was down big time. My beloved Apple stock, I mean, it folded like a lawn chair. And it looks like it's down pre-market about just under 5% further, down to 193. We'll see what it opens at. But the Dow's going to be down, well, currently 250, 2.4% for the S&P 500, 253 for the NASDAQ. Of course, if you followed the market, Treasury prices rose, which means the yields fell. And that's because not everyone, but a large amount of folks, sold stocks and fled to the safety of U.S. Treasuries. And so that's what happened yesterday. I suspect more of that to come. Let's see what the current 10-year Treasury yield is. According to CNBC, 390. Here we go, 3.94. I've got my ads turned off. I hate that. You don't get my traffic. I'll go somewhere else. Thank you. You'll probably do the same thing. Anyway, see, look at that. Well, I'm going to keep them turned off. There we go. 3.9. So it's definitely fallen. Although it's actually risen some. How low did it get? 380, 3.873. These are, by the way, in the Treasury market, these are big swings. It may not seem like a lot, but they're big swings. So anyway, that's what happened, with Treasuries. I guess we're in for some more pain with stocks. So what I've been trying to do is educate myself on tariffs. As an investor, I think personally for me, the most important thing I can do is acknowledge that I know very little about international trade. I can imagine what a tariff is. I can understand a 10% tariff. I'm sure you can too. I can understand reciprocal tariffs. But I don't really know much about the intricacies of international trade. For example, something I've learned is that when you build a car, like I was watching a great video, I think it was the Wall Street Journal, on where parts come from in a Ford F-150, which is made in the United States. And, a lot of them come from Canada, from Mexico. The car and its parts cross the border multiple times. To build a truck, so I would think for most of us, most of the time, we're not really focused on these sorts of things. And I want to show you an article in just a minute, written by Warren Buffett 22 years ago, that I find fascinating on this topic. But before I do that, just some data, and I've linked to all of this below the video. So this is from the census, United States Census. Our deficit, this was in February, our trade deficit was 122 billion. You can see that here. they put out what's called an FT 900 report. Again, I've linked to all of this below. So our deficit, this was in February, right? That's the 122. That's the same number we see here. It was 130 in January, which was a revised number. And of course, this is a 64-page document, so knock yourself out if you want to read it all. I guess you could put it into your favorite AI tool and summarize it, but it's there for your reading pleasure. And so one thing that I've really focused on in my own research is, the headline has been tariffs, and the tariffs and the percentages. And when President Trump had that news conference, which I didn't watch, but I've read about it, he had that chart where he said, well, these are the tariffs all the other countries are charging us. I'm going to be kind and only charge half that. But what economists, I think, and folks that focus on this thing kind of stuff came out and says, well, wait a minute, those tariff numbers that were listed for the other countries aren't actually correct. That's not the tariffs that they charge. It's not right. And it came out, I think, that the number was calculated based on our trade deficits with each of these countries, and there was a formula. And but one thing that I kind of studied and looked at over the last couple of days is that when we talk about trade issues, trade barriers, tariffs are just one aspect of it, right? And just as an example, imagine a country said, okay, I give up. I'm going to, you know what, United States, I'm not going to charge you any tariffs at all, down to zero. And so you imagine a company in the US that sells widgets and says, that's great, I'm going to ship over a bunch of widgets. Say, that's wonderful. But you do need a license. I mean, that's fair, right? You guys require licenses. That YouTuber Rob Berger with his tiny little operation, he has to get a business license, which is true. I do. Fine. So the widget maker fills out the application, sends in for the license, and 3 months go by, nothing. 6 months go by, maybe they get a request for additional information. 9 months go by, nothing. Finally, they get a provisional approval, but they said, look, okay, we're ready, but we do need, you're going to ship a software or some sort of technology. We need all the IP. We need to see it all because, we can't just have you sending software, for example, into our country. There might be viruses. We need to look at that. Oh, you're a cosmetic maker. Fine. We need the formulas because, we want to protect our citizens. We've got good reasons for this. We want all of your technology. We want to see it. And don't worry, we'll keep it safe. Well, what do? I guess it's a business decision. Or you finally start shipping and they say, well, we don't charge tariffs, but there's a value added tax. But that's fair because we charge that, for domestic companies too. But then you later learn that a lot of the domestic companies get rebates. Maybe you do, maybe you don't. Oh, you do get a rebate and you submit for it and 6 months go by and it hasn't been paid. And when you finally inquire, the rebate's coming from a region of the country, not the country. And you know what? That region is out of rebate money for the year. The point is that trade and trade barriers are far more complicated than tariffs. And by the way, if you're reading into that, my view that the tariffs are an appropriate measure, please don't. Please don't read that into my comments. My only comments at this point are, it's far more complicated. At least maybe you guys are on top of all this and you know it all. I didn't, and I still don't. Now I can show you a couple of other things that I linked to below the video. This is the 2024 National Trade Estimate Report, and it's country by country. If you go to the get down here to the table of contents, country by country. Now, this is from a U.S. perspective, right? This is a government website. I'm sure if you asked any of these countries, they may have very different views, but I focused on China, and there are a lot of trade barriers and issues with China. Now, my hunch is China would say the same thing about us. I don't know. But this is a U.S. perspective. Here's the 2022 report. And they talked about an agreement that was reached, and according to our government, China has not complied with it. Again, for all I know, China would say the same thing about us. But these are long documents. This report's 517 pages long. I have not read the whole thing. I linked to this, which is a good from the International Trade Administration on China. But you can research any country in their database. Gives you a much shorter. This is not 500 pages long, but it gives you a shorter glimpse of sort of some of the issues that we're faced with. So, all right, you say that's fine, Rob. Appreciate that. I don't know, is anyone still watching? Yeah, there are a few people still watching. Okay, but let's talk about what's really going on right now. And if you asked me before yesterday, if you said, well, what's Warren Buffett's view on not the specific tariffs that have just been leveled, but just in free trade generally, I would have assumed that he would be in favor of free trade, as few barriers as possible, and just sort of let the chips fall where they may. If we buy more from China than they buy from us, as long as no country's got their thumb on the scale, right? We're competing, they're competing. Their citizens are either spending or saving. We're either spending or saving. And it just, there's a trade deficit one way or another. That's okay. And at least based on an article that I found, that's actually not his view. Here's the article. And again, I've linked to it below the video. I don't know what his views are today, by the way. This is from, obviously from Fortune. And by the way, this is linked to on his website, Berkshire Hathaway's website. And although you can't really find it if you go there, like through the navigation, I couldn't find it. But again, I've put the link below this video. If you want to read anything, this is fascinating, this article. Now, this is 22 years ago, and you can see the trade deficit. It looks not good. It's pretty bad. And it's continued to be a pretty significant deficit. Here's what he said, though, the takeaway. He said, look, he said trade deficits are bad. And the reason they're bad, you'll read the article, but this was my takeaway, is that we're effectively giving our wealth to other countries, 1 month at a time with, $100 billion in trade deficits. And of course, it tends to flow out in the form of US dollars. It may take other forms, right? So a country could take those dollars and buy US land, right? Japan did that in the 80s, but that's still, now they don't own US dollars, but they own US land. They still own part of our country's wealth. I suppose they could buy stocks. Maybe they're on sale. Maybe they'll be buying today. I don't know. But that's just giving them an ownership interest in a US company. They could trade maybe for euros, right? So let's say it's China. They have US dollars, but now they want some euros. So they do a currency exchange, but that's just someone else owning claims to the US, not in this case China, but another country. And he viewed that as, if that happens in an order of magnitude long enough, very, very problematic. The interesting thing was he didn't say tariffs were the answer. He didn't think tariffs were the best response. And he proposed, it took me a while to understand what he was proposing. And he called them import certificates. That's just his word for it. These don't exist, by the way, as far as I know. This was just sort of the idea. But as I understood his proposal, there it is, import certificates. What he said was, when we export something, it's going to generate these certificates. So we're sending goods and services to other countries. It generates these certificates. Let's say we export $50 billion worth of goods and services. We've got $50 billion worth of import certificates. And then companies in other countries can buy these from us. And they have to if they want to, if they want to bring goods into the United States, and there's this deficit, right? And it's the import certificates are based on the deficit, say between us and Canada. And so if there's no deficit, you don't need. If we're both importing and exporting the same amount of money, there's no import certificates and there's no tariffs. They can import and we'll export, and we're even. But when there's a deficit, now they're going to need import certificates, and that's going to cost them some money. So in effect, you could view that as a tariff, except that the big difference, as I see it, is it gave the other country more control, because they could effectively eliminate the need for import certificates by either decreasing what they export to us or increasing what they import to us. And of course, he went into details like, what about countries that are much smaller than us, and there could probably never be parity, and he had some ways to address that. But that was his view. And so what I found interesting about the article was, in that sense, he's not a free trader. And he views deficits, at least then, as very, very significant issue for the United States. Now, if I had to guess, I would say he probably is not in favor of the way the current administration has handled the issue. The other last interesting thing about this article that I'll mention, and then we'll talk about the stock market and what you guys are doing or not doing. And I guess I should ask, before I tell you this last interesting thing, at least it was interesting to me from that article. Let me ask you guys a question. Did you sell stocks yesterday? I'm just curious. He mentioned in passing Smoot-Hawley. Smoot-Hawley, so remember the market, the big market crash that brought us the Depression in 1929. There were Smoot-Hawley tariffs were massive tariffs, not unlike what we've got now in 1930. And of course, countries did what you might expect. They reciprocated and they had their own tariffs. We had this tariff war. And I think most historians and economists believe that that sunk us deeper and deeper into the Depression. It definitely completely brought to global trade to its knees. It's I think, widely viewed as a big policy mistake. What Buffett mentions in his art, he mentions it in passing towards the end of the article. What I found interesting was he said, at that time, we actually had a trade surplus. We were exporting more than we were importing. Of course, this was almost 100 years ago. A lot has changed. And that Smoot-Hawley was in part to try to maintain that surplus by discouraging consumers from buying foreign goods by levying this tariff. That he didn't go beyond that, but I found it interesting because to me, the closest in time parallel to what's happening now is Smoot-Hawley. But we were in a very different set of circumstances then. And, I don't think that justifies or doesn't justify the tariffs. My own personal view is that we needed to do something because of the trade deficit, and we don't have, in many ways, we don't have free markets. And to simply say tariffs are low doesn't begin to answer that question. It strikes me, though, my own take, is I'm generally one that likes calm, and I don't like chaos. I like peace. I don't like to be angry with someone else or for them to be angry with me, which, by the way, would make me a terrible president. And so I just don't like all of the, like the old curse goes, may you live in interesting times. Well, we're living in interesting times. I don't like living in interesting times. I'm from Ohio. Anyway. So this probably wouldn't be my approach to it, or something that I would necessarily get behind. But its impact to me, the impact is less clear. Certainly, prices will go up. I mean, I don't know how anyone would conclude they won't, and that they'll go up significantly, assuming these tariffs stay in place, right? Some people, though, are in favor of it, right? The president of the UAW, right? Because his interest is different. It's very focused on auto workers and employment. And so if a lot of manufacturing has to come back to the United States, which, by the way, will not happen today or tomorrow or next month or this year, you don't just change the supply chain at Ford overnight, and you don't do it inexpensively either. And I suspect a lot of companies, at least for now, might just do very little in the hopes that this sort of resolves itself. But if you're a UAW, you might really support the tariffs. If you're a consumer looking to buy a Ford F-150 in a year or in a month, you're probably not a big fan of it. So there's going to be some winners. I think there's going to be a lot of losers. Inflation's got to go up, right? Now it's like a shock, right? It could be a big jump, and then it levels back out. We'll see. Big questions now about what the Fed will do. I thought I was watching some show yesterday, and I thought that one comment was the best, and it was that the Fed doesn't even know what they're going to do. That's probably right. And they'll figure it out and make a decision come June. Is that the next meeting? April? Anyway, I think so. I don't know what they're going to do. Are they going to cut interest rates? They probably don't know yet now. All right. So in terms of my own portfolio, and where are we? It's 9:20. Let's see here. I'm going to go back to the stock futures. Just I doubt anything's changed, but you never know. Maybe it's gotten worse. Yeah, about the same. There they are. Of course, as longtime viewers would guess, I haven't sold a thing. In our retirement accounts, we now have a target date retirement income fund, so it'll rebalance on its own in whatever schedule it does. That's probably all the rebalancing I will need to do. We'll see. I guess it depends how bad stocks go, but I'm not going to rebalance in my taxable account. I'm not going to sell my Apple stock. Berkshire didn't do too terribly yesterday. Let's take a quick look. That's the other stock that I own. I think it was down 1% maybe. It was down 1.5%. That's pretty good by market standards. But my bonds were up, so I got that going for me. All right, so yeah, I didn't sell anything. If you think about even just before Wednesday, the degree of the tariffs, the scope of them, the amount, took the market by surprise. Now think about that. We knew he was going to impose tariffs. We knew he had a big event planned, and we were still surprised. And yet, I think we can tend to think we now know what's going to happen in the future. We were surprised then, but now we know what's going to happen. And I've just convinced myself that I don't have a clue what's going to happen. I mean, I think if they stay in there, prices will go up. What's going on behind the scenes? Is there negotiations going on? I suspect probably, but none of us know. And so, yeah, I don't sell. I didn't sell during COVID. That scared me more than the tariffs. Although I will say that I find the tariffs unnerving. I mean, I don't want to suggest that I just sit here and don't have a care in the world and I'm completely calm about it all. They trouble me, to say the least. I just don't think there's any move I can make in my portfolio that I could, with any confidence, think 10 years from now will make me better off. Now, let's look at what you guys have said. Well, most of you didn't sell a thing. 4% sold some stocks yesterday. All right. So let's ask a different question. Let's see here. Do you plan to sell anything today? The other thing I want to caution against, and then I'll look at the chat. Feel free to ask questions. But when you have market turmoil like this, you'll often hear folks who have positioned their portfolio in a certain way talking about how they didn't lose money or it wasn't as bad for them. Or you'll see funds, talk about, well, if you own this Buffett ETF, you didn't lose as much money, or if you whatever. And I would caution, or I would suggest that before you take too much comfort in that approach, you zoom out. Because to me, the question isn't what investment can help me on a day when a president raises tariffs by a truckload, or even what kind of investment strategy can benefit me if both stocks and bonds are down double digits in the same year, like happened in 2022. Why? Because these things don't happen very often. They feel bad when they do. They're not fun. But most of the time, this is not what happens. And so, to me, it's not interesting to know, did my portfolio do well yesterday or better than the market, or did this fund, protect folks yesterday or in 2022? I'd prefer to look at like 5 to 10 year periods of time. At least that's how I view it. Yeah. All right. That's my take. By the way, this is another source I linked to. This is from trade.gov. You can look at export and import data per state, which I find kind of cool. Let's see how Virginia is doing. Well, we import more than we export. I wonder if are there any states that export more than they import? I don't know. Right, that's still Alabama. What happened? It's not working. Did Doge do something to this website? Or maybe it's user error. Oh, wait, no, it's Virginia. It did work. It is user error. Okay. Yeah, we import a lot more. Twice. 40 billion versus 21. Biggest is from China, then Mexico, then Canada. All right. What do you guys have to say about all of this? Jerry wants to know what country, whoops, where'd it go? It's not what I want. The chat is, you guys are asking so many questions so quickly, I can't, by the time I click on the chat, it's the message, it's already moved. The question was, which country will cave first? I have no earthly idea. Of course, you saw that China now is reciprocated. But part of the issue with tariffs is that countries don't, or at least some countries, don't want to appear weak. China would certainly be one of those countries. And so we've got this sort of back and forth. And the question is, how do you get out of that cycle? Because do you think President Trump is not going, you've reciprocated. Okay, I give. I'm going to, no, he's not. So, how do you end that? The hope is there's a lot of negotiations going on behind the scenes. But, this, I will say, though, the one thing about situations like this is it does underscore, I think, the importance of diversity, not just stock bonds. Like if you're listening to the show and you're 20 or 30 and you've got a long time to go before you need your money, I mean, just stop listening. Seriously, shut down YouTube, turn me off. You don't need anything. Just keep investing. When you make your 401k contribution on your next payday and you put your $500 or whatever it is into an S&P 500, you're going to get shares a lot cheaper than you did last payday, right? Because the market's gone down. And trust me, probably a couple of years from now, but certainly 30 years from now, this will be this, well, think about the tech bubble crash. So some of you listening weren't even investing then. It's just a distant memory. It was massive. I mean, it was, we lost a truckload of wealth, at least on paper, in 3 years. But now it's you read it in history books, some old guy on YouTube with gray hair talks about it. You don't want to be like him. It's just, so if you're 20, 30, even 40, even 50, you say you're 50, you're going to retire at 65, this is not, this is just an interesting story. Maybe you're going to keep investing and maybe you'll be buying lower and lower if the market goes down some more. If you're in retirement or near retirement, that's when I think this really matters. And it's why diversity is so important. And so in our case, we have a lot of bonds. Our portfolio is roughly 70-30. I'd let it go down. Well, actually, I haven't checked since yesterday. So who knows what it is? Maybe I need to log in and see what my asset allocation is now. Of course, again, the target date fund, which is a big chunk of it, it takes care of itself. But, that's why diversity is so important. It's also why I've been preaching international diversity for a long time. Of course, yesterday, when you have these trade wars and global trade, they all kind of crater. But I think long term, it's important to diversify by country as well. It's my own view. So hopefully you're well diversified. One question that comes up, and let's see. So basically, most of you are not doing anything. 4% say you're going to sell some stocks today. Um, the one interesting question that I see asked a lot is buy the dip. Is this the dip? Should we buy? Are stocks on sale? First of all, there's no way to know if this is the dip. Well, we know that today they're going to go down. Oh, 9:30. It's going to open up here in a second. Let's see what happens. We know that the dip it wasn't yesterday. We're going to go down more today. But the reality is you don't know. We just don't know. And again, whether the market's on sale to me is the question is fair value of an investment, whether it's a stock or an ETF, not what its price was yesterday. Certainly, if you were going to buy, you'd rather buy today than yesterday or 2 days ago, right? Because it's cheaper. But there's no way to really know, is this the dip? Which is why I tend to, well, for me, I just tend to lump sum invest. Let's see if the Apple stock. All right, so we opened up. I'll make this a little bigger. This is just the Apple stock app. I track a lot of things. By the way, I don't own all of this stuff. I just track different things. But my Apples, I do own Apple. It's down 345. Of course, it's got a lot of exposure to China. S&P's down 237. I always like to, we look at one day or if it'll come up, it's just started 1 week. Year to date, it's down 10. 1 year, it's up actually 245. Apple is up 16% over 1 year. It's easy to forget that, by the way, when we're focused on 1 week and it's down 10%. Anyway. All right. What do we got going on in the chat? Did you rebalance? Yes. I didn't rebalance. Again, the target date fund, I don't need to. And that is 99% of our retirement. I guess our Roths are primarily in SCHD, which is the Schwab dividend account. I didn't touch that. What was it yesterday? I don't remember. It's down 189 today. It's down 5% for the week. Year to date, it's doing better than the S&P 500, but you would expect that in these circumstances. It's down 387. I will say, I know a lot of small business owners, and they are hurting. Those that import goods, from China or Vietnam or other countries. I mean, if they stay in place, it will put a lot of them out of business. It just will. The margins aren't large enough, and they can't simply pass all of these costs on to the consumer. How bad it will be, I don't know, but they're definitely struggling. One business owner that I know, a family member, is a painting contractor, and I've been meaning to reach out to her to see how this might be affecting her business. Like, I don't know, are paints manufactured in the U.S.? I don't know. And what about all the other supplies that they have to buy? Of course, they occasionally have to buy work trucks. Those prices are going to go up. I don't know how you avoid that. I'm going to ask that question. Let's see here. Here's my question. So the question is, for small business owners, I'm sure some of you own a business, how will tariffs affect you? And I'll give you not at all. I'll say lower margins. I'll say lower margins significantly, if I can type, and then I'll, put us out of business, which I hate to have to even put that option in there because that's painful, but we'll see I don't know how many small business owners are watching, but we'll see. Almost makes me sad to have to type that. In my case, of course, it won't affect me at all because I'm not selling goods and services. I'm not sure what I do, but I don't. Whatever I do, I don't import it from China. Um, but again, I know a lot of businesses that do, and consumers want that, right? Um, one aspect we haven't talked about is is there there's the national security angle that we can't manufacture the kinds of things that we used to be able to in this country, and our ability to build things, one could argue, helped us significantly win World War I and World War II. And one could say, well, we've lost that ability, not completely, of course, but again, this is where I probably have to just claim some level of ignorance. It's not a topic I've studied in depth. I mean, conceptually, it kind of makes sense to me. I could understand how that would be an issue, but it's one of those political things you discuss at Thanksgiving, or maybe you don't, but and everyone has a strong opinion. But if you actually sat back and said, well, wait a minute, Frank, how much do you really know about this? Probably not much. Uncle Frank probably doesn't know a whole lot about it. Austin says Berkshire has a ton of cash. They do. They have a ton of equities, by the way. Far more equities than they do cash. But yeah, they do have a ton of cash. I do think about our own cash and bonds. I'm not a big fan of a certain type of bucket strategy, as you might know. But I do look at our fixed income and say, okay, how long can we live on it? How long could we live on it if we didn't change our lifestyle? And how long could we live on it if we made big changes to our lifestyle, which for us would probably mean just where we live? Because we don't really, day to day, we're not traveling all over the place. We don't buy, expensive, jewelry. And I drive a minivan, for crying out loud. My wife drives a fancy car, but she'll drive it into the ground. Her last car, you could own a car a lot longer than this, but her last car she owned for, I think, 17 years. Okay. How's the poll going? So we had almost 100 votes. So there's a fair number of business owners. Unfortunately, 17% think it could put them out of business. Hope 18%. I hope that's not true. I'll keep this running for a bit. But only 27% said not at all. And my hunch would be, if you're an accountant and you're providing accounting services to local companies, I guess to the extent it affects your clients, it could affect you. So maybe that's, maybe it would affect me. Maybe advertisers, I don't know. I don't do sponsored videos, but I have affiliate relationships, and I guess there's ads on YouTube. I don't know. Maybe it could affect it. Jonathan, otherwise known as Vinyl, I assume that the he is me, but I don't know, should ask if we plan to buy. It's interesting, that question. I'll put it in here in just a minute. So, if you're still saving for retirement and you're making your contributions through your paycheck at work or quarterly with your IRA or annually, I assume you're going to keep doing that. And that's true no matter what the market's doing. When I hear, do you plan to buy, that to me says you've got cash that you've been sitting on. And maybe you found, because the market's gone down, you're gonna use it to buy whatever, some stocks, some ETFs. For us, we don't have that now. The cash that we have is either going to be to stay as an emergency fund, or we're going to spend it actually in the next few months. And what's today, the 4th? We're going to spend a truckload of it in 11 days, both for 2024 taxes and 2025 estimated. And I don't know those numbers yet. I mean, I have an idea. I suppose we could have some money left over, and I would buy, but I would just put it into one of the 3 funds that we own in our taxable account. I could put some in Berkshire, maybe, but Anyway, looks like the percentages haven't changed much. So I'll end that poll and I'll ask Jonathan's question because that's a good one. Do you plan to buy stocks or funds? I'll just say today or soon. I'll say yes, no, and I guess we could put in here undecided. Maybe you're thinking about it, but you're not sure. That seems fair. Did I spell undecided correctly? I think I did, but you'll tell me. Okay. How are we doing on time? Because I have a hard stop at 10 because we're heading out. This is I think an interesting point. Everyone is mad at the U.S., other countries, and that's a big part of my own thinking about why I'm not a fan of the tariffs. We hit allies. We hit countries where we have a trade surplus, and sometimes you have to shake it up. Sometimes you have to anger people or countries, right? Depends on the circumstances. But it strikes me as we've created a lot of chaos and uncertainty and ill will unnecessarily. That doesn't mean we shouldn't have done anything. But I certainly that message resonates with me. But again, I'm sort of predisposed to not want to create conflict. President Trump doesn't mind conflict. In fact, I almost think he's wired the other way. He likes to have some conflict. That's my sense of him. All right. 57% of you. Wow. You're going to buy stocks today or soon. 19 are undecided. That's interesting. So that means 50, at least the way I interpret this, is 58% now. We're sitting on some cash. Okay. Let me just double check the market. I don't know. I'm just hoping maybe it went back up. Actually, it's not terrible that it's going down. It's just kind of, it's good and bad. It's down 3. I can show it to you. 333, the S&P. By the way, what you're seeing behind this, that's what I see from YouTube. Here's the poll up here, all of your chat. I see chat on the other computer too. Yeah. All right. Russ says, if you had to put money on it, would you guess there will be major shifts in the policies by the 10th, reversal or continuing with the latest policies? Here's the thing I struggle with the current approach. When President Trump announced tariffs on China, Mexico, and Canada, and then he held off, gave him a break. By the way, he was asked a question about the effect this would have on automakers in the U.S. and prices, and his response was, "Well, I gave him a month break." And I thought, that doesn't really make sense to me. Okay. Anyway, when it was somewhat limited in scope, it seemed to me I could see my way through to negotiations. At the time, it was because the stated reason was mainly fentanyl, and immigration issues. Obviously, fentanyl with China and Mexico and Canada. Immigration issues, I think, mainly with Mexico. It seemed to me, okay, I could see how that might resolve itself through negotiations and maybe quickly. When you basically add tariffs on everyone, I don't know how it would just be a policy shift. I don't know. But then it would seem to me like he looks foolish. Now, someone could say, depending on your views, he looks foolish now. But if he simply, reverses course in a week, he might. It just seems odd to me, and I just it's hard for me to. If I were putting money on it, I would not predict that. Of course, I'm a terrible predictor of the future. I'm only sort of good at understanding the past. Okay. By the way, I am buying in the sense that we just made a 401k contribution, and I'll just put it to work. The check hasn't cleared yet, but I will put that to work. So I guess in that sense, we're buying. The comments. So we've got buy the dip. Some people are predicting the dip, falling knife. The idea there is you don't want to catch a falling knife. You want to make sure it's stuck into the floor first before you reach for it. But of course, if you guys can figure out when that happens in real time, let me know. Jonathan says utilities are going up. I guess we'll see. This is an important comment from Mike. He says, I hope the markets drop by 30% or more. I assume he's still buying and not, old like me. As long as I don't lose my job. And to me, that's a big wild card. How is this going to affect jobs? And part of it might depend on your industry, right? If you want to get a job at Ford, it might help you. We'll see. In the short term, by the way, it's not. I mean, they've shut some plants or, temporarily. And I don't know if it was Ford that did that, but one of the automakers did. But, if you've got a job that depends on imports, we'll see, right? Or if you've got a job that, maybe you're a commissioned salesperson and now you've got your job was hard enough as it is. And now, you've got to deal with the fact that what you're selling has just gone up in price by 30%. So you might not lose your job, but you could very well end up making less the sales are harder. I suppose if prices go up and it's a percentage commission, maybe you make more per sale. I don't know. I think the unemployment picture is really uncertain. And of course, that's one of the two mandates that the Fed has, right? The stable employment and interest rates, inflation. And so we'll see what happens to unemployment, the picture, and what they do, how they respond. Could interest rates go down? I mean, yields are down because people are flocking to treasuries. I think it's a difficult thing to predict, but I think we'll have, some ideas soon. So Mike, this is not about tariffs, but Mike says, are target date funds worth it considering they have slightly higher fees? You should make that determination for yourself. I mean, they give you some convenience. I would translate the difference into dollars. So I wouldn't just say, well, this is 15 basis points versus 7. I would say, well, what's that 8 basis points costing me in actual dollars every year? And then, is the convenience worth it? All right. Do you plan to buy stocks? Yes is now up to 60% and 18% are undecided. So as many as 78% of you might be buying stocks. How are we doing on time? Okay. Tom says iPhones will be over $2,000 in a few months. Now that's an interesting question because, Apple has a lot of cash. I mean, they could try to soften that blow for a time. And they also have strong margins. I don't know what Apple's going to do. As a CEO right now in a company like that, man, I don't know what you do. John points out that we do build things. It's just, IP related, which is true. And a point's been made. Do we really need to be able to make handkerchiefs in order to, you know, I just use that as an example. Uh, but I think the counterpoint to that would be there is some benefit to be able to manufacture things like cars and trucks, which we do in the United States to a point, so that if we had to, we could also, quickly manufacture tanks and other things like that. Um, again, I will admit my ignorance in terms of details uh, on how that plays out, but back to the stock market. While I look for the next chat, it's kind of just hanging out now. 3%. It's off its lows for whatever that's worth. I always like to look at Bitcoin. It's up today. It's down 80 to 82, but it's up 0.74. Anyway, I don't own any Bitcoin, by the way, or gold. Gold's done well. Vincent said, just joined. Did you already discuss what, if anything, we should do about them? Well, from an investing perspective, I'm doing nothing. But other people are buying. In fact, I've got a poll now. You might see it. 61% now out of 538 votes. We've got about 1,300 people watching at the moment. By the way, this isn't just on YouTube. Some folks are watching from LinkedIn, Twitter, Facebook. Yeah, 61% are buying, Vincent. So I don't know. I'm not sure if that helps you or what, but yeah, this is one of my big concerns. When people start losing jobs, it will affect all businesses. And that's from HR, so they know what they're talking about. But seriously, again, I don't pretend to know how this is going to affect jobs, and it no doubt will vary based on industry. But in some ways, it's like, who's going to blink first, right? It's going to hurt China for sure in different ways. And of course, other countries, not just China. And a lot of folks, these supply chains, and again, I'm not a supply chain expert, but I can imagine how complicated they get. So, if someone said, well, we're building cars in Mexico, we'll bring that back to the US, that just doesn't happen at the snap of you can't just do that. And no doubt would cost billions of dollars to make that happen. A lot of folks left China in terms of manufacturing and went to like Vietnam, but now Vietnam just got pummeled. It's like you spend all this money. It takes, to build a manufacturing plant, you're looking at 3 to 5 years. These things don't happen overnight. Anyway. What else is going on? Aura has $500 to invest. Any suggestions? I don't have any. I mean, if I were going to invest, I would just invest according to my asset allocation plan. If I were going to buy stocks, I mean, probably if I were going to, I mean, I own small amounts, like a few shares of a couple, but for us, it's just Apple and Berkshire. Should I buy Apple? I wouldn't buy Apple because we just have too much of it. But we've owned it for a long time. I could see buying more Berkshire. Great investment to own in a taxable account because it doesn't pay dividends. There is a lot of talk about, I guess we levied tariffs on countries that are only occupied by penguins, but in fairness, shouldn't they be paying tariffs as well? I mean, why should they get off scot-free? All right. So this is a political comment I'll put up, and I'm sure many of you will agree with it. Many of you will not agree with it. The only thing I'll say is, at least when it comes to investing, which is what this channel is about, retirement, I try to evaluate things as objectively. And by the way, I'm not saying this is, I mean, as objectively as possible. No, I try not to let my own strongly held beliefs, one way or another, get involved in the basic questions that we need to answer. Should we rebalance? If you have cash, should I buy now? Should I reevaluate my asset allocation, which I never do during market turmoil? So I would never right now say, oh, I need more bonds, I'm going to change my asset allocation. I don't do that when the market is volatile. I never do. As a way to make sure I'm not really just getting scared and running out of the market. But that's my attempt, is to try to put my political views aside as best I can. And I'm not one way or the I have strong views that would, some lean conservative, some are more moderate or even a little liberal. So I don't just fit into one bucket. But I try to ignore all that as much as I can. Here's someone that Mike says he liquidated his position 3 days ago. I don't know how much money we're talking about. He's waiting for the dust to settle. Mike, would you let us know when the dust settles? That's always the hard part for me. I'm not sure if I'll know when the dust settles. And then, by the way, it's going to unsettle again after that for reasons we can't even possibly imagine. But you certainly timed your way out pretty well, I'd say. Han says, if stocks were so overvalued, this decline is a good thing, isn't it? Well, from a stock valuation perspective, we can say that they're not as overvalued as they were. And I guess here we'd probably focus on large U.S. companies. I wouldn't necessarily describe international markets as a whole as overvalued. One could even argue that small cap in the U.S. were not overvalued. I don't know about mid cap. I just haven't looked at them. But so in that sense, one could view it as a good thing. And that's particularly true if you're young and still buying. I think what's not a good thing, though, that's the problem with stock market action like we've seen, is that there's something always causing it, right? There's some real world event going on that doesn't just drop 5% on its own. And some of those events are what you might describe as sort of normal cycles. We cycle through growth, and GDP expands. We have contraction. We have a recession, and we kind of accept that as sort of the normal economic cycle. Or in some cases, like the tech bubble that burst in 2000, it was assets. We got ahead of ourselves. We got carried away. And these things sort of correct themselves at some point, and sure enough, that's what happened. But then there are I'll call them externally caused events that shock the system. COVID would be a recent example. And now these tariffs would be an example of that. And when these things happen, I think it's easy to go down a very negative spiral. I did that with COVID. I didn't sell anything, but I sort of tried to extrapolate. Well, wait a minute, this isn't good. If none of us can go to work, this isn't just a normal thing. We can't function. How are we going to correct that? Now, at the time, it didn't occur to me, it seems obvious in hindsight, that politicians would flood our mailboxes with money and that the Fed would drop rates. Seems obvious. Now, of course, and that would cause the market to go gangbusters. I couldn't predict that, but maybe you did. I didn't. Now we get these tariffs, and it's easy to kind of spiral down and say, well, wait a minute, China's not going to just give up, and Trump's not going to give up, and all the other countries, and now they hate us, and Canada won't visit us anymore. And Canadians are staying up north, and I love Canada, by the way. And I don't want it to be the 51st state, for what it's worth. And it's the Gulf of Mexico. Okay, that's as political as I'm going to get today. I'm sorry, but that's how I feel. It's easy to sort of say, I don't see how this sort of fixes itself anytime soon. And we can imagine all kinds of bad things. Prices go up, maybe unemployment, bad relations, even with our allies. Um, but the reality is, we don't have a clue how this is going to resolve. We don't have a clue. Well, I don't. And yeah, so but I don't think all of that is a good thing. So the stuff that's causing the 5% drop yesterday, and let's look at it now, 2.74% so far on the S&P 500. Yeah, I don't. If we look at the stock market in isolation, none of what's happening concerns me. I mean, you don't like to log into your balance and see it lower. I get it, but none of that concerns me. But the stuff that's causing it, yeah, it concerns me. But I don't. So I don't see that as a good thing, Han. But it will resolve itself at some point in some way. I just don't know what that looks like. That's my take. Oh, I guess Chrysler's already laid off 900 people. Anyway, well, my hour is up. I don't know if you found this comforting, interesting. I don't know the links. I linked to everything below the video. I do recommend the Warren Buffett article. I found that fascinating. You've got tons of data. I've linked to a 500+ page report on trade. I mean, that'll keep you busy for a while if you're interested. I'm not going to read it. I skimmed it. But yeah, we'll see what happens. I do have a live show. The normal live show is, I think, Monday, right? The 7th, 7 p.m. So maybe you can join then. Maybe Monday we'll have a good day in the market. I don't know. We'll see. But hang in there. I hope for you small business owners, I hope things that are affected, it gets better for you. For all of you, I hope no one loses their job, but I guess time will tell. As for the investments, I'm closing shop and going away for the weekend. I'm not going to look. Well, maybe I'll peek, but I'm not gonna do anything about it. At least that's my approach. So have a great day and a great weekend. Hang tough, and remember, until next time, the best thing. This is when you really need it. The best thing money can buy is financial freedom.